Hello students, let's start our today's video. Today we are going to discuss a new chapter, that is capital structure. As we all know that capital is the most important element for any business organization. Capital may be raised with the help of various sources. If the company maintains proper and adequate level of capital, it will earn high profit and definitely would provide more dividend to its shareholders. As we have done in the previous chapter, we are aware about the term of capital. Capital refers to the amount invested in the business organization. Basically, here capital structure refers to the kinds of securities and the proportionate amount that make up capitalization. That is, it is a mix of different sources of long-term sources such as equities, preference shares, debentures and long-term loans and returned earnings. The most important thing we have to know that the capital structure only contributes of the long-term sources. It does not include any short-term liabilities. The term capital structure refers to the relationship between the various long-term sources financing such as equity capital, preference share capital and debt capital. Deciding the suitable capital structure is the most important decision of financial management because it is closely related to the value of the firm. As we all know that it is most important factor to determine the capital of the organization. Now we have to decide what type of sources we have to use in order to contribute as the part of capital. According to the definition of Gerstenberg, capital structure of a company refers to the composition or makeup of its capitalization and it includes all long-term sources. According to the definition of James C. Van Horn, the mix of a firm's permanent long-term financing represented by debt, preferred stock and a common stock equity. On comparing both the definition, we know that capital structure refers to the long-term financing sources. That means अगर हम capital structure की बात कर रहे हैं तो इसमें ज़्यादा focus हम किस पे देते हैं, अपने long-term sources पे देते हैं. That basically includes the equity share capital, the preference share capital and the debentures. Now there's also a term called financial structure. Most of the people must be confused. What is a financial structure? What is a capital structure? Are they same things or not? But we are going to discuss about the capital structure. The term capital structure is different from the word of financial structure. Financial structure shows the pattern of long-term financing. It basically measures the extent to which the total funds are available to finance the total assets of the business. In short, we can simply say that the financial structure is always equal to the total liabilities. That means it includes the fixed liabilities as well as the current liabilities. Fixed liabilities known as non-current liabilities. So we can, in the directly way, we can say that the financial structure is equals to capital structure plus current liabilities, because we know that capital structures only include non-current liabilities. Here is a difference given between the financial and the capital structure. Financial structure includes both long-term and short-term sources of fund, whereas capital structure only includes the long-term sources of funds. Financial structures includes the entire liabilities given on the balance sheet, whereas capital structure only includes the long-term liabilities of the company given on the balance sheet. Then the financial structure consists of all sources of capital, whereas capital structure only consists of equity, preference and retained earning capital. Financial structure will not be more than important while determining the value of the firm, whereas capital structure is considered to be the most important variable for determining the value of the firm. आई एम श्योर दैट कि आप लोग को फाइनेंशियल और कैपिटल स्ट्रक्चर में दोनों में डिफरेंस पता चल गया होगा. दैट मीन्स द फाइनेंशियल एंड द कैपिटल स्ट्रक्चर आर द टू डिफरेंट एस्पेक्ट्स. द फाइनेंशियल स्ट्रक्चर इंक्लूड्स द करंट एज वेल एज द नॉन करंट लाइबिलिटीज, whereas the capital structure only includes the non-current liabilities. Here's an example I have taken just to create a more clarification about capital structure and financial structure. Here's a balance sheet given which says that the fixed assets are of 25,000, goodwill of 10,000, stock of 15,000, bills receivable of 5,000, debtors of 5,000, cash at bank of rupees 10,000, making the total of assets as rupees 70,000. Whereas on the left hand side the liabilities are given which includes equity share capital, preference share capital, debentures, retained earning, bills payable and creditors. So we will be working only on the aspect of capital structure and financial structure. As we all can see that while calculation of capital structure, we only take the part of the long-term liabilities that will include equity share capital, प्रेफरेंस शेयर कैपिटल, डिबेंचर्स एंड रिटेन अर्निंग. दैट मीन्स कि जब इनकी हमने वैल्यू को प्लेस किया ओनली लॉन्ग टर्म और उसके बिहाफ पे अगर हम प्रोपोर्शन कैलकुलेट कर दें, दैट मीन्स इक्विटी शेयर कैपिटल 50,000 एंड आउट ऑफ द टोटल long term current liabilities that is of 65,000. As we all can see that the equity share capital is of 50,000 whereas total non current liabilities are of 65,000. We can find out the proportion by placing 50,000 divided by 65,000 into 100. That would be equal to 76.92. That means approximately out of the total capital structure, equity share contributes to the 77% of the total capital structure. In the same manner, preference share capital contributes to 7.69%, debentures contribute to 9.23%, whereas retained earning contribute to 6.16% of the total capital structure. Now when we want to find out the proportionate of the elements or the sources on the basis of financial structure, the financial structure includes all the liabilities. As we all can see that in the previous question, the total of liabilities was rupees 70,000. So same here, the liabilities value will be given as 70,000. Now we simply have to compute the proportion. As here, the value of equity share capital is 50,000, whereas the total liabilities of 70,000. Again, the proportion can be computed by 50,000 divided by 70,000 into 100, which is equal to 71.42. That means when we are comparing the equity share capital out of the total financial structure, we find out that it contributes to 71.42% of the total financial structure. And in the same manner, if you want to compute the value of preference share capital, it will be 7.14%, debentures would be 8.58%, retained earnings would be 5.72%, bills payable will be 2.85%, and creditors would be 4.29%. I'm pretty much sure that you are able to create a differentiation between the capital structure and the financial structure. That's all for today. Thank you, students.